Now, the Central Bank of Kenya's recent move to raise the base lending rate, leading to a revision of interest rates by commercial banks, may not achieve the intended economic objective. Well, this is according to economists, who also say raising the cost of finance is likely to have a dampening effect on the economy. Now, the adjustments will see people at the bottom of the pyramid who cannot access any credit, especially those who run small family businesses, severely impacted. Now, we caught up with a Nairobi cab driver who is already feeling the pinch. Ayub Abdikadir reports.
Anthony Wachira is among Kenyans who have received communication from his bank of a hike in interest rates, meant according to the Central Bank of Kenya to stabilize the shilling, whose recent dip against the US dollar has led to price pressures.
We're very, very difficult because of other responsibilities.
We travel with him on a short trip, and he puts into context the ripple effect of the hike in the servicing of the loan he took for his car.
Itakuwa very difficult watu kuanza kuchukua loans kwa gari kwa hii business because kila kitu iko high, rates za bank pia wanaenda wakipandisha, venye mafuta inapanda, venye uchumi iko inaenda ikichange, so it's very difficult. Ukishindwa kulipa gari unakuja wanachukua gari, which is very difficult.
This follows adjustments made by the Central Bank of Kenya, which moved its rate from 10.5% to 12.5%, subsequently prompting commercial banks to notify their clients of the adjustments, which observers hold is not healthy for the economy.
The lack of confidence in the economy, that is the single most important factor. And that you can only address if you address the underlying factors, which is the business environment. And this is looking at the cost of production, looking at taxes, looking at those. That is how you can attract investors. So raising the interest rates alone, I don't think so.
For Wachira and other Kenyans who have gotten notifications from their respective banks, this compounds an already dire economic situation.
Itani affect sana sasa na fuel price venye iko high, it's too high. Itakuwa very difficult sasa venye uchumi, kila kitu iko high, tax, chakula, medication. Itakuwa very, very difficult.
While the Central Bank of Kenya says the big interest rate hike is meant to address the pressures on the exchange rate and mitigate second-round effects, observers see it differently.
This action by the Central Bank, let me tell you, is going to worsen the economy in the short term. That's definitely it's going to happen. The moment you raise cost of finance, then people will not borrow. Businesses cannot afford to borrow because then you have already the bottom line of many businesses are suffering.
According to economists, the move by the Central Bank of Kenya could slow the government's effort for fiscal consolidation through revenue generation, especially from small businesses in the informal sector. Ayub Abdikadir, Citizen TV.